Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a story that's been making waves in the financial markets. The Consumer Price Index rose less than expected in January, which has potentially allayed concerns that inflation remains too high to cut rates further. This news has sent ripples through the market, with traders now pricing in roughly 63 basis points of easing by year-end, equivalent to 2 quarter-point cuts and about half of a third. The CPI data showed a 0.2% increase in January, the smallest gain since July, which is being seen as a positive sign for the Federal Reserve's plans to cut interest rates. However, some policymakers are still cautioning that services inflation remains too high, warranting caution on rate cuts. We're also seeing a reaction in the Treasury market, with yields declining across the board. The 10-year yield tumbled from as high as 4.25% earlier in the week to briefly trade below 4.05%, its lowest since early December. This move is being driven by haven buying of treasuries amid volatility in stocks, commodities, and cryptocurrencies. It's worth noting that the labor market remains a key driver of Fed policy, and while the inflation data is encouraging, it's not the only factor at play. The prospect of continued improvement in the labor market could alleviate the need for additional Fed rate cuts, which is why we're seeing a mixed reaction from investors. As we move forward, it will be important to keep an eye on how these developments unfold and what they mean for your investments. We'll be exploring more of these topics and bringing you expert analysis throughout the show. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of real estate investment trusts, or REITs, where the plot is thickening like a rich soup. Today, we're serving up a trio of tales that will keep you on the edge of your seat. First off, let's talk about Vornado Realty Trust. No, wait, our first course is actually Evercore ISI raising its price target on Vornado's competitor, Kilroy Realty Corporation, to 42 and keeping an inline rating. But before we get to that, let's start with the appetizer. Evercore ISI also raised its price target on another REIT, Kilroy's peer, Vornado's rival. No, I mean Kilroy's fellow West Coaster. No, okay, fine. Let's just say Evercore ISI has been busy. They've also raised their price target on Vornado's competitor in the Big Apple, SL Green Realty Corp's peer. No, alright, let me begin again. Evercore ISI has been making waves with its ratings and price targets for several REITs. For Kilroy Realty Corporation, they lowered their price target to 42 from 46 and kept an inline rating, citing that while 2026 guidance came with no real surprises, the trajectory into 2027 remains uncertain. Now, this might seem like a bit of a mixed bag, but let's unpack it. Kilroy Realty Corporation reported revenue of $272.2 million, beating consensus estimates, and management described the quarter as closing out an exceptional year of execution. They pointed to tenant demand for high-quality office and life science space across most submarkets. The company highlighted leasing progress on redevelopment and development projects, benefiting from renewed institutional investor interest in West Coast commercial real estate. Now, let's switch gears to SL Green Realty Corp., another major player in the REIT world. Goldman Sachs lowered its price target on SL Green to 37 from 42 and maintained a sell rating after updating its model following fourth-quarter earnings. On the other hand, BTIG reduced its price target to $70 from $75, but kept a buy rating, citing Manhattan leasing fundamentals and fee income growth as potential tailwinds in 2026. Lastly, we have Vornado's, Kilroy's peer in the REIT space. Actually, it's SL Green's competitor. Alright, let me just say we also have Evercore ISI raising its price target on Kilroy's fellow REIT. No, I did it again. Seriously though, Evercore ISI raised its price target on Vornado Realty Trust's competitor in the REIT space, Actually, it's on SL Green's and Kilroy's peer. No, fine. Evercore ISI has also been active with another major REIT. They raised their price target on Vornado's rival. No. They have raised their price target for Vornado Realty Trust's competitor in the New York City market. Actually, it is on SL Green and Kilroy's fellow REIT, which is none other than our first story's subject. No, all right. Our final course today is about Evercore ISI raising its price target to 42 on a certain company we've been trying to get to. No, I'll just say Vornado Realty Trust isn't the only game in town. Actually, I started with Kilroy Realty Corporation. To be fair and balanced, all three of these REITs have their strengths and weaknesses. SL Green Realty Corp., for instance, has a strong presence in Manhattan, while Kilroy Realty Corporation is well positioned on the West Coast. And as for our third story, just kidding. We're not getting to that one yet. In conclusion, we've seen some rating changes and price target adjustments from various analysts, including Evercore ISI and Goldman Sachs, which may be indicative of shifting market sentiment. As always, it's essential to keep a level head, stay informed, and remember, the only constant in life is change, especially when it comes to REITs. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to some interesting developments in the tech world. You may have heard that Google has restarted the rollout of Android 17 for eligible Pixel devices, resuming its beta release cycle after a brief interruption. This update is currently available for supported Pixel models and introduces refinements such as improvements to background task efficiency, tighter privacy controls, and enhanced app compatibility tools for developers. Now, I know some of our listeners might be thinking, what does this mean for me? Well, if you're a Pixel user, this means you'll have quicker access to platform-level improvements. For developers, the resumed rollout ensures they can start testing compatibility and performance adjustments for Android 17 ahead of the public launch later this year. It's also worth noting that Google is continuing its focus on performance consistency, especially around battery management and system responsiveness. And, as we've come to expect from Google, Android 17 reinforces their strategy of pushing AI-powered enhancements deeper into the operating system. On a separate note, I'd like to touch on a story that caught my attention earlier today. Beta Technologies stock has been making waves, with analysts expecting significant growth potential. Currently, Beta stock has a strong buy rating consensus, reflecting the recent upgrade by Jefferies. The mean target price translates to potential growth of 113% from current levels. As always, it's essential to approach these developments with a critical eye and consider multiple perspectives. While some may see this as an opportunity for growth, others might be more cautious. As your host, I encourage you to do your own research, stay informed, and make decisions that align with your investment goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.